It's a big week for inflation. Are we going to see a continued downtrend from the recent inflation reports? That is what we're focused on today. Welcome to SRT Live. I am your host, Sean Richard with the Sean Richard Mortgage Team, and I'm here at Guaranteed Rate. Hope you're having an incredible day this post-Thanksgiving Tuesday. I'm sure all of you had an opportunity to stuff your bellies full of some delicious, delicious food. And this week, you get to stuff yourselves full of economic and housing data. We have an action-packed week this week. And so let's go ahead, get into it. So that way, if your home buyer can help you understand the market and make the best possible decisions. If you're a real estate agent, want to equip you with the tools and knowledge to be able to have incredible conversations and help serve your clients in the best ways possible. So let's get to it with the week in review. So last week, we had a relatively light news week because of the holiday. Bond market was closed Thursday, had an early day on Friday. And so Wednesday was really our big data day, our big information day. Normally, we get jobless claims on Thursdays. Last week, we got it on Wednesday. And this was a surprise to the upside with weekly jobless claim filings. So we get two reports. We get initial claims and then we get continuing claims. Initial claims, those individuals filing for unemployment for the first time, and then continuing claims, those renewing their unemployment benefits. So weekly claims came in at 240,000 week over week filings. This is up pretty significantly from the 223,000 the week before and above expectations of 224,000. This is definitely an elevated number. Something to watch. We're always looking for trends in the unemployment claims space. Now, continuing claims, we saw a pretty high number as well. Previous month was 1.503 million renewed claims. This week, we saw 1.551 million renewed claims, and this was about 40,000 renewed claims higher than expectations. So we're also seeing continuing claims be inflated. That could signal that we're seeing employers slow down the hiring process. I don't think that it's any secret at this point that companies are either slowing down hiring or laying off individuals. We're probably going to see more layoffs coming down the pipeline. And so these are going to be some really important numbers to watch as we head through the rest of the holiday season into Q1 of next year. Now, we also last week on Wednesday got new home sales. And this is pretty big because this measures, of course, new homes, new construction homes sold across the country. This is an annualized pace. And so it came in at 632,000. Now, you may or may not think that's a lot. However, the previous month was an annualized pace of 588,000. So we saw a pretty sizable increase. This is a 7.5% increase month over month in new home sales. So that's really positive data for the housing market, showing that new home sales are staying strong in the face of the economic conditions that we have. All right, now getting into this week, let's start with what we've had so far. So today was a pretty massive day for housing data. We got the Case-Shiller Home Price Index, and we also got the FHFA Home Price Index. And so FHFA is the Federal Housing Finance Agency. Now, the difference between the two reports, the Case-Shiller report is kind of the gold standard of home appreciation. It's national appreciation on pretty much all homes that they can measure. And the FHFA Home Price Index is appreciation on single family residences with conforming loan limits. Now, for all you lay people out there, conforming loan limit meaning any loans that are not in jumbo space. So currently, jumbo loans are going to be anything north of 650,000, 700, if I'm not mistaken. And so conforming loan limits. So the FHFA numbers don't take into consideration jumbo, and it also doesn't take into consideration homes that do not have a mortgage. So it's not quite all encompassing, which is why the Case-Shiller report really is the gold standard of home appreciation. So Case-Shiller, month over month, we saw a 1% decrease in home prices, but year over year, we're still in a very sound position. We shrank a little bit from the previous reading of 13.1% year over year gains down to 10.4% year over year gains. Now, the media is going to be all over this. Oh my gosh, home prices are coming down. It's crazy. Now, wait a second. What did I just say? We saw a 1% decrease month over month. So now over the last 60 days, we're down 1.5%, you know, and year over year, we're still up 10.4% on home prices. So we've seen such an amazing increase over the past several years. And now we're starting to see the slight dip kind of coming back down a little bit. And the media starts freaking out, talking about the sky is falling. Okay. So this is what we want to do. I'm not here to tell you that home prices won't come down. They very well likely will come down. They clearly are coming down a little bit, but are we going to see a dramatic decrease in home values? I highly doubt that. And the FHFA report does give us a little bit of an indication into that. And we saw month over month, FHFA showed a 0.1% increase in home price appreciation versus the expected 0.7% decrease. So this is big information. This is showing that the housing market, just like on new home sales, shows that the housing market has been staying extremely resilient to the economic conditions that are out there. Yes, demand has come down based on home prices rising, interest rates rising, but the pace of sales, the appreciation levels have been staying extremely resilient. So if you're a home buyer, you can have confidence that the home value of a home that you buy is not going to randomly plummet after you buy a home. You can have pretty good confidence that. Now, my Nostradamus, can I guarantee that? Of course I cannot. But the fact that we've seen this resiliency so far gives me optimism that we're going to continue to see this resiliency. And I'll get into that a little bit more on another topic. All right. And then the other item that we got today was consumer confidence. This is the outlook of consumers on where income will be over the next 6 months, where they expect the economy to be over the next 6 months, and so this is all gauged based on a baseline that was set in 1985 of 100. So you consider 100, that's the baseline. Over 100 is optimism. Under 100 is maybe pessimism. And so consumer confidence last month's reading came in at 102.5. So we were kind of like consumers like, might be good, might be bad. We're not 100% sure. Well, we got a little bit closer to the middle on this month's reading, came in at 100.2. So just a hair above that baseline. So consumers are very undecided. They're very unsure of exactly how the future is going to go for us economically. They're not necessarily pessimistic, but they're also not overly optimistic either. So just one more component that we want to keep an eye on and see how the consumer is feeling, how the average person, the average person, is feeling about where the economy is headed. All right, now I talked about this week being a massive, massive week. I'm going to try to list everything that we've got coming up this week. Tomorrow alone, we've got the ADP payroll report, which is the big precursor to Friday's Board of Labor and Statistics jobs report. Tomorrow, we also get we're in November. We get the second reading for Q3 GDP. So this is the second annualized reading for Q3 GDP. So we're going to pay attention to that. We also get pending home sales. This is a big one for our real estate industry. Also tomorrow, I told you it's a lot. We get the JOLTS report. This is the job openings report. This tells us how many jobs are out there open across the country. This gives us a little bit of a pulse on the labor market, what employers are doing from a hiring standpoint. And then if that wasn't enough, we also get to hear from Jerome Powell, Fed chair himself. His comments are always market moving, so we want to be ready for that. So that was Wednesday. Now, on Thursday, as always, we get the jobless claims, initial and continuing claims. But more importantly, and this is the blockbuster number of the week, we're going to get PCE, which is personal consumption expenditure. This is the Fed's favorite measure of inflation. Now, we saw the previous reading of CPI, Consumer Price Index, which is also an inflation reading, come in lower than expected. This reading for PCE is for the month of September. Wait, October. It's for the month of October. The last CPI reading was for the month of October. So I would expect that this is going to probably tell a similar story to the most recent CPI reading. What does this mean for you as a home buyer and as real estate agents? As a home buyer, if we get an exceptionally positive reading on this PCE report on Thursday, that is going to show that inflation is starting to calm, and that will help bring mortgage rates back down. Now, it's not going to be a massive amount overnight, but the last CPI reading that we got below expectations, we saw almost 0.5% in interest rate improvement in one day. Now, no guarantees that we're going to see the exact same type of movement. However, the potential is there. So this Thursday's inflation reading on that PCE report is massive. Don't mince my words. It is absolutely massive, and that could give us some really positive movement going forward. So if you're a real estate agent watching this, these are awesome conversations to have with your clients. Help them understand the economic impact on the real estate market and their investment as a home buyer. And if you have any questions around this, hit me up. You've got my number right here. Leave some comments down below if you're watching on our private Facebook group or on YouTube, but let me know and we can have a one-on-one conversation. Okay, so that is on Thursday. And then on Friday, as I already alluded to, we're getting the big Board of Labor and Statistics jobs report. And as always, we get unemployment rate along with that. Now, this is critically important because the last unemployment reading that we got showed that unemployment ticked up to 3.7%. We've heard of layoffs, maybe hiring freezes. Are we going to see unemployment rate tick up again? These are important indicators of the R word that shall not be mentioned, that we could end up in early next year. Maybe we're already in. We got to figure it out. So big week ahead of us. So what are we focused on? What are we watching as we move forward this week? Number one, no surprise, the PCE inflation report on Thursday, going to be huge. Number two, home sales and appreciation as inflation declines. So as we see inflation start to creep down, the pace of home sales, are we going to see it start to tick back up? And are we going to see home appreciation tick back up? We're seeing a temporary decline. Are we going to see that reverse course? I think that we will, my personal opinion, because as inflation comes down, mortgage rates will come down. And when that happens, a lot of those individuals that are sitting on the sideline, you may be one of them, or if you're a real estate agent, your clients may be in that category. A lot of people sitting on the sidelines are going to start to revisit the home buying process, home selling process, and demand in the market is going to increase. Well, when demand increases and supply does not follow suit, prices rise. So this is going to be something to watch. Third, the jobs report this Friday. The health of the economy as we potentially roll into the big R and see where we are as a labor market. And then in conjunction with the jobs report is the unemployment rate. Those two are going to go hand in hand, and we want to see how healthy is our labor market right now. So those are what we are watching heading through the rest of this week. If you are watching in the Powerhouse private Facebook group, thank you so much for being an amazing part of our community. If you're checking us out on YouTube, our YouTube channel, make sure that you smash that subscribe button so that way you can have up-to-date real estate and economic information, so that way you can make the biggest financial decisions a little bit easier. Other than that, thank you so much for joining me today. I am Sean with the Sean Richard Mortgage Team here at Guaranteed Rate. This was another episode of SRT Live. Have an incredible rest of your week. Take care.